Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 132 of the AJ Brown Show. Today is May 10th. AJ, how are you doing today?
I'm doing well, Sip. I'm doing well.
I feel like the past couple of weeks we've been talking about this bull rally. The past 2 weeks or so, we finally got a market pullback. This week, I think the buyers are coming back. There's a little bit more optimism. I was looking at the notes today. Bad news is good news because we're assuming that we're going to cut rates sooner. What are you seeing? What's driving the market? Where do you want to get the party started today?
I mean, let's just talk about the week of no news, right? The biggest piece of news we got today was a University of Michigan survey on consumer sentiment. Preliminary survey comes out about halfway through a month, and then the final comes out about 2 weeks later. And it was actually quite sour compared to what was expected. There's a lot of rumors that, all this fear about the Fed not making any rate cuts, that kind of eased a little bit. I mean, if I share my screen and we look over at the CME sentiment, our Fed Watch tool, which kind of gives us an idea of what investors are thinking about rate drops or rate hikes for that matter. June, nothing's expected. July, really nothing is expected either. Let me click over to July. There it is. Not much is expected either. I mean, there's a small contingent that has actually grown that think maybe in July we'll get a rate drop. But then in September, it looks like the majority of folks are telling us that, hey, we're probably going to see at least a quarter point rate drop by September. And then if we jump over to December, which is kind of looking in advance, I mean, anything can happen between now and then. Don't forget, we've got a election happening here in the United States on the political side, but pretty much the consensus is we'll have dropped a half point by then. But it's a little bit stronger than it has been, Sip, this week. But again, I do have to emphasize that if we look at the economic calendar, we didn't really get any news this week. If I come back to the overall weekly calendar, there wasn't any big news. So that means that investors and traders alike were allowed to kind of stew in their thoughts and their emotions, which kind of went the direction of positivity this week, even though some Fed presidents were interviewed and basically said, hey, not much is going to happen. So, yeah, there was some renewed buying.
And I feel like earnings season is still at play here a little bit, driving a few of the sectors. Is there anything standing out on that front?
I mean, earnings came in strong. People are excited about the earnings being, strong, that things are still moving, and yet renewed interest in the Fed dropping their rates, right? I'm going to throw some technicals because I want to get our guest on as sooner than faster. So I'm going to throw some charts up on the screen really quick for everybody. Let me hide this. This is my confirming indicator, the 3 and 5 exponential moving average crossings. So I'm going to hide that because we already have it confirmed. I just wanted to show folks kind of what happened when we use retracement analysis to kind of understand what the broad market's up to. So yeah, we had that little bit of a pullback. And again, when we use these lagging indicators, things become clearer once they're in the rear view mirror. But, that ended on April 29, this little pullback. And we seem to be in a confirmed, up rally again. But now we've got this overhead resistance at about 5,250. If anything, us premium sellers, the folks that like to sell options premium, I think we're poised to be in a good place for the next, at least the next couple of months through the summer doldrums, because it looks like we're going to be in some sideways chop for a while. And I'm kind of stoked about that.
So we're getting, I mean, the retracement is coming back to our all-time high levels, right? I mean, we're only a couple hundred points, maybe 100 or 150.
Yeah, I mean, if you use the S&P 500, we're less than about 45 points, but that looks like it's a heavy level of overhead resistance. I think that a lot of these folks, and again, you and I commented on the fact that towards the middle of February up to the end of that little high in the beginning of April, we were seeing a lot of like new money coming into the markets, almost as if people had fear of missing out, FOMO. They heard of all their friends down the street making money on Nvidia, making money here and there. So they were throwing money into the markets that otherwise would have been in more secure investments. And then look what happened. As soon as they put their money in the markets, it started to pull back. And that always causes, especially for people that aren't experienced at the markets, it causes a lot of white knuckling. They have to go explain to their significant others why they got kind of excited and when things pulled back. So as soon as you reach that level again, a lot of these people who have been white knuckling it for the last month and a half, they're going to get ready to sell, which is going to create this kind of self-fulfilling prophecy and kind of reinforce a level of resistance. Now, I hate to future frame, but we'll just see what happens as we go about another 45 points higher. But it already looks like today we're getting kind of a bar pattern that hints that maybe a top is coming close, if not already found. We'll see what happens, Sip.
Yeah, because last week I think our theme was chop, right? Like we need some pretty good news or something geopolitical, right? For us to make those new highs and like stay. Otherwise, like you mentioned, it'll be pretty good resistance. And as a premium seller, as an options trader,
we got the right tools.
You have strategies to take advantage of that. And so let's go ahead and just give everyone, because we may have some new viewers on the show today due to our special guest who will get on here fairly soon. And I know that his strategy is a little bit different than yours. And so if anyone from that audience is interested in learning a little bit more about AJ's strategies, covered call writing, using options in general to take advantage of the potential chop, we've got an awesome daily workshop that you can hop into. We've gone ahead and thrown the link to that in the chat. I feel like we can go ahead and take our break here soon and bring our guest on to get some overall, further analysis of the markets. I know we've got some good opportunities, some good tickers to go over. So let's go ahead and take a shortened break today. Bring our guest in and keep looking for opportunities. I do think we should review the VIX trade again because when we come back, because I mean, we're kind of back to where we were right before the trade, right?
I'm telling you, this VIX trade never lets us down. So definitely after the break.
We'll take a break. We'll be right back. We'll go over the VIX. We'll bring in our special guests. We'll give you guys some great setups. If you have any questions, we are live. Feel free to throw it in the chat. We'll see if our pro team for the day can get around to answering some of them. Otherwise, sit tight. We'll be right back.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. As AJ said, the link to that is in the chat. Head on over there and sign up. Additionally, we will be showing some of your indicators when we do our analysis. And we do want to let everybody know that some of these indicators are free. So we'll throw the link to that in the chat as well. So if you want to follow along, that'll be there. So before we bring our special guests on, let's review that VIX trade again, right? Because it's directly correlated. The market's coming back up. The VIX is coming back down. And what's unique, I think, is that these are like all-time lows, right? And that's what makes it an appealing setup, right?
Mm-hmm. Yeah, the VIX is a measurement basically of how much confidence or uncertainty. And it's really a testament to kind of a psychology experiment. Here, let me zoom out a little bit. I'm going to show you the VIX since the beginning of the VIX, right? This is a chart showing all the way back into about 1985. And what you'll notice is that as the VIX comes down, that's when we're confident, right? That's when we're not options are underpriced because we're not using them as hedges as much. We're very confident about what the market's going. And what you'll notice is this white dotted line I have on the screen, which represents the mean or the average since the beginning of the VIX. You'll notice that we only as a species, as a human beings, get so confident, right? We get only so much down below that white line. But when the proverbial poop hits the fan and something happens and fear takes over in us, you'll notice that instead of topping out at about the same distance as our confidence bottoms out on the VIX, you'll notice that when we get afraid, we get scared and we react crazy. This was 1987 when the whole tax code was rewritten under the Reagan administration. You can see the S&L crisis right here. You can see the dot-com bomb and the dot-com bust and boom right there. You can see the whole 2008 crisis. You can see the whole COVID crisis. When fear takes us over, we get really afraid. And it's interesting how for some reason we're wired in a way to become more fearful and more survival instinct than we are to become more confident and optimist. But with that said, we have a whole trade. If I zoom back in to, what's happening current day, we like to hedge our portfolios, right? We do this particular trade in order to hedge our portfolios based on the whole concept that you're never going to get so confident. So what we do is we wind up doing two vertical spreads, a debit spread and a credit spread, that basically cancel each other out. And what that means is one pays for the other. And so long as you stay in that zone that is bracketed by those two vertical spreads, basically you make a small amount of credit. That's why we call this a portfolio hedge trade. In other words, you put this on with maybe 10% of your portfolio, fully expecting that most of the time it's going to just basically break even, do a little bit of profit. The beautiful part is when fear takes over and a lot of our other trades sometimes go, against us, or we have to take defensive measures and, they don't work out the way we want them to. This particular trade shoots to like 98 to 1. The last time we put this trade on about a month ago, it wound up paying 98 to 1. So for every dollar we put into it, it came back with a 98 gain. So that's like absolutely phenomenal. And it's setting up again. And so one of the things I would do is head over to the YouTube channel and check out, because we really dissected that. And I don't really have the time to do that today, but we dissected this trade into detail about 4 or 5 weeks ago. So check out those replays. But what we're waiting for is that, kind of bottom signal. I'm simply using either just a simple 3 and 5 day exponential moving average crossing, or if you want to get a little bit more elegant, another thing that, and SIP mentioned our free indicators. Our free indicators point them out very nicely. The fast MACD, right? That's, the Appel father and son team came up with the MACD, and later Marvin came up with 6 and 19 and 3 rather than the 12, 26, 9, which are the typical settings. So it kind of makes it a little bit faster. And when I throw that on, you're just waiting for the VIX to give us this bottom signal. And then that's when you'd place those two trades. You'd position them in a way that they would, cancel each other out. And then you have that top threshold. Like I said, last time we had this fear introduction into the markets, our trade wound up paying exorbitantly. So check out those replays, and we'll get on with our guest.
Yeah, I mean, I guess we should get his opinion on the VIX, because we were chatting earlier about some of the potential directional plays, and I assume that if the VIX is, coming down, then those opportunities are looking a little better. So, without further ado, let's go ahead and bring in our special guest. Today's special guest is, drum roll, Mr. Casey Stubbs from TradingStrategyGuides.com. Good morning,
The
Casey. How you
boss with
doing?
the hot sauce. That's who he is.
Hello. How are you guys doing? Thanks for having me. Glad to be here.
So Casey, we were just digging into the VIX. You have any thoughts on that? What's your perspective of the VIX? Do you take a look at it? Does it play a factor in any of the things that you're doing?
So the VIX is great for determining confidence, like AJ said, and I think it's really a great indicator to get a gauge on the markets on what's happening. It's while I was watching that, I thought it was really good, but I had a question for AJ. AJ, do you know how they actually calculate the VIX to know? How do they know what the confidence level is? Because it's a great indicator, but I was just wondering, what is the
Sure.
metrics used to create that?
Yeah, so they actually reverse engineer out of the options price, right? So we all know that options have that intrinsic value component. That's the actual value of the option when it expires. But then there's this extrinsic value, which is, affected by how much time is left before the option expires. It's affected by all sorts of emotional variables. And one of them is, should I be buying options in order to hedge against any unexpected moves? And so it actually creates for us a variable that we call implied volatility. It's almost as if we look at the buying pressure on the options as a source for hedging, and it calculates, if a lot of people are buying, causing the price to go up, that means that the implied volatility is going up. So we can look at that implied volatility on individual symbols, but then when you take all 500 of the S&P 500 stocks and you kind of take all those implied volatilities and try to mathematically create, that's what the VIX is, right? The VIX is basically implied volatility measured on the 500 best stocks out there traded on the S&P 500.
Excellent. Yeah, that's pretty cool. I mean, it's just such a great way to see, because we know that the markets are controlled by emotion, right?
It's true.
It's not logic. You'd think that it would be logic. For some of us, we try to use logic, but for the most part, it's emotions.
It's a psychology experiment, but yeah, that's basically it. It's analyzing. It's kind of like the whole insurance model, right? You can kind of understand where you're living in the world based on how much you pay for insurance. Are you living in Hurricane Alley? Are you living in earthquake? Are you living in tornadoes? You can tell by how much the insurance is in a given place.
I got
right?
no flooding worries, no earthquake worries, no tornadoes. I live in one of the best places.
So I have a home in Myrtle Beach, South Carolina, and I know based on my wind and hail policy, where I'm located. But that's kind of what the VIX is, right? People use derivatives as a source of insurance, and so what they're doing when they're buying options in order to hedge against unexpected moves in their underlying symbols, that gets picked up by the VIX, right? They're saying, oh, there's increased buying pressure on options. That means that people are worried. That's what the VIX is measuring.
And so, Casey, is this pullback in the VIX helping identify any potential setups for you? And maybe before you go into those, do you want to give a quick rundown to the audience of what you guys are doing at Trading Strategy Guys? Because I know we got this awesome price action sheet. We were talking about some of your signal rooms or programs where you're sending these out to people. What's the lowdown on what you guys are doing over there?
Well, I like to just create a lot of content to help traders get educated in the market. So we've got a ton of articles. We highlight them with strategies, a lot of different strategies there. I've got a podcast. AJ's been a guest on my
I
show. It was
have been.
great interview. And so you can check out the podcast. I just recently published a book. The book is somewhere on the website. It's not on the homepage, but I need to get it on there. So yeah, you can go and learn a lot of stuff, right? People are learning how to trade specific strategies on all kinds of different markets.
I was living in Colorado, SIP, when I first met Casey. And so that means we're talking, he and I have known each other and have been, chatting with each other throughout the years for over 15 years.
Yeah, we met in Trading Expo.
Yeah.
Yeah.
So Casey is a longtime friend, and I'm stoked to have him on our show.
Yeah. And yeah, same with AJ. AJ has taught me a lot. He's uncovered all of his indicators for me and showed me what he's been working on. And, he's been a big help for me over the years as well.
And before the show, we were commenting on how young both you and AJ like to look on your guys' advertising.
Yeah, that's actually the first picture that I took when I started my business, and I just have not updated it yet.
Yeah,
like
I've got some. I've got some from 2006, so I know all about that.
Yeah, I'm not quite that bad, but close. Like that's probably like 2010.
All right, so given all these wonderful and special tools that you have, Casey, is anything looking good for you this week? Is anything setting up that kind of fits into maybe something that our viewers are doing and a little bit of what you might be doing with your different strategies?
Yeah, so one of the charts that I wanted to look at today was Coca-Cola. And so that is in a pretty interesting position for me. So if you look at it, and what I like to do is look at a little bit higher time frame. So take a look at it on like a weekly chart, actually, if you could do that.
How about 2 years?
Okay, there you go. So you're going to notice that we just recently had a consolidation pattern. Like, so if you go to the left, there was not quite that far, just where those little blocks of arrows are, right? Like in this area. See that, how it's consolidating? And then I like to really look at the price action of things, but the price went down and it broke down, but then it immediately had a nice buy signal, right? Right at the bottom there. And then it broke out of the top, right? And so the breakout of that consolidation period to me is definitely a signal of buying, right? Of buyers. And it's a nice breakout. And I personally love trading. So if you want to know a little bit about one of my key strategies that I love to do, is I love to find consolidation periods like you see to the left, and then I look for breakouts out of the top. And one of the ways that I learned this strategy is a very, very old book. I like old stuff, and I read an old book. It's by Nicholas Darvis. It's called How I Made $2 Million in the Market. And he's got a strategy called the Darvis box, and he looks for consolidation patterns. And when the price breaks out of the pattern, then you basically buy the stock, and then you put the stop loss at the bottom of the box. Right. And then the idea is for you to measure the box size, and then you will trade it to the top of the box or tighten your stop and see if it comes out to the next side. So what I was looking at for this was about the bottom to be around the 58 area and maybe targeting around 68, 70 on this particular trade. And I think when we look at the current market situation, again, since I'm with AJ, I'm going to ask him some questions, because I want to take advantage of his wisdom. But when we look at the market situation, I feel like a stock like this could be pretty good if we have some trouble in the economy.
Yeah.
Right? Because this is like a comfort food, right? Everybody wants to get their, life is bad, let's drink some pop,
It's true.
Yeah. So I don't think it's going to get hit if the economy gets hit. I think it'll do pretty well. And I think that will show up in the stock price. And so with that being said, I know you guys were talking about, bad news is good news, that the economy, if it's bad, we might lower rates. And I wanted to ask AJ, because of his insight, we have had an upward market, even though the rates are going up. And even now we're very close to the all-time high. And I personally am kind of surprised by that. I feel like if they're saying rates are going to be staying higher longer, you would think that we would see more of a downturn. And so what do you think is the psychology of the market, and why do you think that it's still up there, even though we've had this continuous rate period?
I know, Sip and I have been talking about that, about how it just doesn't make sense. And I keep calling tops, and investors keep blowing through my top.
Yeah, you just did it today. You said today we got the level here. So if it breaks through, I'll be really surprised.
And I have been over and over. I mean, I look at that. First of all, I look at the bond yield inversion, and the only thing that I can understand behind that is that the Fed behind the scenes is doing a lot of bond selling. They did a lot of bond buying during the COVID era, and they're trying to, do a lot of selling. And so that's the only reason why I can explain that the bond yield inversion isn't a telltale sign of an upcoming recession. But, Casey, I've got my seatbelt buckled, because I feel, and again, this is my humble opinion, I've got nothing, the hard data is disagreeing with me, but I feel like when the bear is ready to jump out the window, we got to be buckled up.
Well, that's a great point, AJ. And I was just looking for some stats here. And this is something that I got about a website that collects data, and they collect predictions, right? So they're like surveying the market. And this is really interesting, okay? Last year, around this same time, there was a 70% prediction that there was going to be a recession. So everybody was saying that it was going to happen. And guess what? Everybody was wrong. Well, guess what people are saying this year? And it's absolutely crazy, but there's only 8% of the people that saying a recession is coming. So I feel like you're not in the 8. I don't know. It seems like you're in the 8. 8% says there is no recession. Everybody's saying it's going to be great, right? And so I love the fact that because we know, right? And it's your humble
just
opinion,
doesn't make sense.
We know that sometimes when the market reverses, it's not going to be gentle.
No,
right? It's not going to, that whole soft landing thing, like, oh, we're not there. That's hasn't developed at all.
That hasn't happened since the early 90s.
Yeah. So it could get a little difficult.
The Fed is not very good at soft landings.
Yeah.
But they are very good at being delayed in their response. So I am expecting
kick the can down the road.
Yeah, I am expecting them to be so conservative at lowering rates that they're going to miss that when they should have lowered rates will be in the rear view mirror, and that, we're going to see something. That's just, again, I don't, and I'm one of the most optimistic people, but it's just, I'm also a student of history, and history just says that this doesn't make sense. But
yeah, well, I mean, on another, it's a very difficult position, right? I know a lot of people love to be critical of the Fed and all that, but I look at it as a very critical and difficult decision, because it's almost like you have to pick pain, and you have to pick it either way, right? So you're either going to deal with inflation, and that's going to cause a lot of pain, right? And people don't want that. Or you're going to have to deal with the pain of, people having trouble in their businesses, people having trouble pay things, getting that inflation down. And either way, it's almost like it's a lose-lose situation. Things are good right now, but either way, there's going to be pain. It's like, you got to pick which one. And so they're trying to balance it, but it's really difficult.
I would never want that job.
Yeah. Yeah. So with that being said, we're trying to invest, trying to predict, trying to position our portfolio so that we can thrive no matter what happens. And so that's why I love your show and what you're doing with options. It's really awesome.
Casey, your next name is also very interesting because I feel like it's in the news a lot in that this traditionally cheaper consumer is now not going to purchase fast food items, right? Like the fast food consumer is changing the first time in a while. And what are your thoughts on one, maybe the strategy behind McDonald's, and is there a little bit more to it than just the technical part that's drawing interest for you here?
Well, for me, again, I really like this company, right? They've just done such a great job very similar to Coke. They're consumer driven. They've got a lot of success. They've expanded. They've got a great brand, and they always find a way to generate revenue. And so if you look at the way this is a similar pattern that I've got set up with this particular stock than I had the other one. The Coke was I was looking for consolidation and a breakout at the top. This is more of an uptrend if you see the blue arrow to the left right there, you're going to notice that when we had that pullback, there was a nice price action pattern where you see the bar went down and then it broke out and then we had a nice move up. And as you move to the left, we're getting higher highs and lower lows. So it's a really nice trend. And right now it's actually sitting at a resistance level and also a trend line support. And so where we're at right now, I do not have a specific buy setup, so to speak, but I am watching it, right? Because I feel like we could see this slow down a little bit, the downward move, see some consolidation, and then catch a buy signal somewhere in here. So I'm looking for the price to stabilize in this area, maybe around 265 again, and then looking for something to like that. Like you got a little triangle there. If price will break out, I think that we could go back to 300. And then according to the trend line, it's been making higher highs. It could break 300 and even go up to 310. So I'm looking at this as a potential trade. I'm not in this position right now. And, since AJ's the options expert, I've always felt like McDonald's, and I've done this in the past, McDonald's is a great position for writing covered calls on. You can hold the stock, you can collect the dividends, which is a huge benefit. It's got a great dividend, and you can also collect premium on this particular stock, and it's one that you can have in your portfolio. It's time tested. It's a great stock.
Yeah, I would. Holding McDonald's in your portfolio is not a bad idea.
And at the rate they're increasing prices, I have no doubt that their revenues will continue to increase.
It's they've got a great business model because of their franchise system. So a lot of the way that their profits are created are not from selling food items, which is what people tend to believe is how they make their profits. But they are, the inflation thing is really interesting because there's a family restaurant by my house. Okay. And as a trader and a guy who looks at numbers, I love to do these scenarios, even though they're not big macro pictures. It's just small things. There's a family restaurant by my house, and this is a restaurant. You go in, we can sit down, it's like a diner type place, and we can get our meal cheaper than if we go to McDonald's. Which to me is just crazy. You go to a sit-down restaurant, and the prices are actually less than what you're going to get at McDonald's. It's a little crazy, but the consumer, McDonald's are still making money. People are still going, even though the prices in some cases are equal to what you'd be paying in restaurants.
And I wonder if any of that has to do with some of the at least in California, they have these new minimum wage laws for the restaurant industry, and they're starting to displace the workers, add in automation, and
have you guys seen any of those the robots and stuff in the kitchens at all? Like I've actually seen that at a couple places, and I'm not opposed to that at all, because I think that I think that minimum wage, a business has got to make money, right? And so if you can get a robot to do the job and it's going to save you money and it does the job effectively, then you should get the robot, right? And so the $20 minimum wage is going to put a squeeze on some of the probably the smallest business owners, but the bigger ones like McDonald's, they're going to put $1 billion and figure out how to make robots. I mean, I've seen the arms that will pick up the bag of food and it takes it to the back of the kitchen. I mean, they're automating a lot. People, there's nobody at the counter anymore. You just go in, you push the button. So they're getting the people to do the work instead of the employees. And so all that stuff, they just find a way to keep those revenues going.
It's like the beginning of the future. Like it'll never be the same again.
I mean, it's always the beginning of the future, isn't it?
Yeah. And that's one of my stock investing strategies too, is technology. I'm optimist like AJ, right? Yeah, there's a lot of bad stuff happening. The world is not easy. Confidence goes up and down, but I love technology and I love human ingenuity. If you look back at the history of the markets, who's really done well? And it's the companies that create new things. They create cutting edge technologies and they lead the pack. If we look at some of the greatest technologies over the last 150 years, things like automobile, electricity, all of those amazing things, even McDonald's, they created the fast food industry. You got internet, technology companies, all of these great things, cell phones,
AI
all of these
now.
great things. Yeah. I mean, it's just so amazing. And I love tech and I'm a big believer in human ingenuity. And I believe that we're creators and people that create, it's going to generate revenue and it's going to generate jobs.
But at the same time, the two symbols you picked, Casey, I have to point out, they're very much defensive plays. Coca-Cola. Another one that you might throw in the mix that I've always traded when the market looks like it's not healthy is Hershey, because people like their pop, they like their chocolate, and they like their fast food burgers.
Yeah,
right?
I love Hershey too, and it's been really beat up, so it could be an opportunity. The thing with the Hershey is the chocolate craziness that's happening with the price of chocolate. Is we talk about inflation, the price of chocolate. I haven't studied it exclusively, but it's a little bit insane how much it's spiked.
For you guys out there, that's ticker HSY.
All right. Well, thank you, Casey, for stopping by. Once again, anybody that's tuning in hasn't checked out any of Casey's stuff, tradingstrategyguides.com. He's got a great price action sheet. He's also got some signal services to get some of these names out to you in a timely fashion. Casey, we're gonna run through our speed. AJ, do you have a pick of the week this week? No pick.
No, I sure don't. I'm just ready to do our viewers speed round. I hope, Casey, can you stay on and give your 2 cents as well?
Absolutely, yes.
Cool.
All right. So every week we've got some viewers from around the country and around the world that want some insight on some names. So let's dig into those. And AJ, get your perspective, maybe get some feedback from Casey and kind of get the party going. So let's go ahead and head on over to the West Coast. This is Tan in Seattle, Washington, interested in Reddit, ticker symbol RDDT. AJ, what are you thinking with Reddit? Casey, is this one that you've delved in at all?
I haven't traded it, but I mean, everybody knows about Reddit. It's a big deal.
Well, Tan, and you guys know that when I like my premium selling strategies, which are just so reliable, they're based on, boring stocks that aren't in the news that we can sell premium against and make a consistent income out of it. So Reddit's in the news, right? And Reddit just went public, so I have no history to base anything on. So this is falling in my view, kind of in the whole speculative kind of like, am I a gambler or not? Do I want to see if this is going to be one of those popcorn kernels that pops or doesn't pop? You could definitely, I think that there's a healthy options chain already on this. Let me jump over and look at the options chain. I'm in Casey's. I know about it, but I haven't looked at it because it's a little bit too fresh. But yeah, people are trading options against it. So there's definitely a lot of hedging. There's a lot of gambling against it. One of the things that you could think about, which we've talked about on this show, is watching the implied volatility specifically on Reddit. Because I'm trying to think of what would be the sure play, right? I'm not sure if we can do a play based on its direction, because I don't know if we know its direction. I know that the users of Reddit aren't so excited about Reddit being a company. So would you get a revolt? Da 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 da. All could change the price of Reddit in a moment. So for me, that's not the consistent play. But maybe there's a play in volatility. Like, for instance, is implied volatility going up or down? Because you can remember, options give us the ability to profit on a lot more than just price movement. We can profit on time passing by. We can profit on this whole concept of fear and confidence, right? So if we see, for instance, that all of a sudden there's an increase in fear around what might happen with Reddit, we can watch those implied volatilities. We want to be a seller of options because our options that we sell, would definitely benefit from that change in the implied volatility. So, there's a couple of different plays, but my knee-jerk reaction is let this public company mature a little bit and find out where it's going. What do you think, Casey?
Well, I think that's a great analysis, and I always like to have friends like AJ around because I'm kind of like, AJ says, what's the sure play? And the thing that comes into my mind is like, okay, what's the way I can make the most money the fastest? Right. And so I'm like this guy who's made a ton of mistakes and a lot of high risk stuff because I think like that. And that's a good thing. It's a strength, but it's also a weakness. And same with AJ, he's more conservative, and that's a strength for him as well. And so I like to get people around me like that. But the way I would look at this is like, okay, is there a possibility that this thing could really, really go? And what I would be looking for, and I haven't done research on this, but what I would be looking for is their growth expectations, right? And what their revenues are saying. If their revenue growth in the past has been good and there's a possibility for continued growth, then even if the charts are down, then it would be a great potential trade, especially maybe something that you would maybe dollar cost average into your portfolio. Add in, I've made some very great and profitable positions on IPOs. And one specific one that I just recently did was Coinbase. And Coinbase launched out and it was really high. And I paid like 300 something when it first came out. But I just believed in their growth, right? I was looking at the revenues. I knew crypto transactions were going to go up. So I just kept dollar cost averaging. And it went from 300 all the way down to like $36. But I just kept adding to the position. And when it was 36, I bought a big chunk because I just believed in the growth, right? And so that thing went from 36 all the way. It's like 200 right now. I was able to dollar cost average in about $68. And so my position went from 68 all the way up to where it is 200. And it on paper, it looked like a terrible trade because my first position was $330, but I had believed in the potential long term. And, sometimes you just got to be patient with stuff.
And Reddit
Casey,
is just, all right, go ahead.
No, you go.
Well, I was just going to say that they just came out with earnings and their revenues are up, but they are trying to be like a Meta in that they have to improve their advertising mechanics and the demand for those services in order to sustain it long term. But AJ, what were you gonna add?
No, I wanted to go in a different direction. I wanted to actually ask Casey, speaking of Coinbase, I know you play around in the cryptos. Do you want to take a minute and tell us what you're doing in that world?
So same type of thing that I was mentioning with Coinbase is I'm dollar cost averaging. Bitcoin has been, I love Bitcoin, by the way. I think it's just amazing. The reason why is because it's limited, right? I look at money. So money is something that you have to work for, right? There's got to be labor and pain to, you have to trade something of value, right? Your labor. What's the most important thing in your life? Your time and your work, right? Well, Bitcoin, you have to actually pay a lot of money to create it. You buy these massive warehouses, you fill them up with computers, you put these expensive software algorithms on it, and you're running, electricity and air conditioners. You're spending millions of dollars to mine this crypto, right? So that right there is value. Just like if you're buying gold, right? Gold has to be dug out of the ground. There's value there versus the US dollar, where you maybe push a button and it instantly creates in thin air, right? And so it's magically delicious. But the Bitcoin takes real work. And so I have been dollar cost averaging for a long time, and it's been really well. And I'm going to continue to do that because, for one, it's Bitcoin versus the US dollar. The US dollar is inflating. I mean, why is everything going up? Why are all our prices going up? Well, they're going up because the US dollar is getting weak, right? That's why everything goes up in prices. Prices would always stay the same probably if we didn't just create money out of thin air, right? People don't realize that. They put money in their savings account. They think they got money, but really every time there's a dollar printed, every time, that's taking money out of your savings account. And so I'm a big believer in it. I think there's such a huge market. And I think that, it's young people. Do you talk to young people? Go talk to young people. Young people love crypto, right? A lot of the talent. See, I like talent too. I invest in people that have good talent. A lot of the young talent, the people with skills, they're going into the crypto markets.
Awesome. I think we've been pretty pro crypto for a while in terms of the ideology, not so much on specific plays, but I think we definitely agree in that it is this future. I'd be curious to see if the Fed ever comes out with its own coin, because that would kind of stir the pot.
I don't think it would be any good. I just don't. I wouldn't. I mean, who knows? I mean, if it's backed by their stuff, but they just, I don't know. I personally don't think they understand about that. They're more into controlling things.
All right. So that's
a different philosophy, isn't it?
Yeah, exactly. And so, right now is on the technical side, Bitcoin's definitely bullish. We've got, it's been holding some key support levels. We just made an all-time high. And so here's the fundamental kicker here. If we're high and the dollar's been holding kind of steady, right? But if the interest rates drop again, that's going to put a big hit on the dollar. And that should pump Bitcoin, in my opinion. So I think that if we see weakness in the dollar and we see some economic weakness, it could really take Bitcoin up pretty good.
All right, cool. A little detour on crypto. Let's get back into some of these, last few names that we have. I think this next one is pretty boring and fits in line with some of the things we were talking about earlier. This is Lonnie from Cleveland, Ohio, interested in Pfizer, ticker symbol PFE. AJ, what are you thinking? What are you seeing?
Well, now that Pfizer, for at least in the news cycle, the whole COVID pandemic is in the rearview mirror. And so Pfizer also has now not been in the news for a while, and that makes me like it, right? Because now, see, here's something you got to know when you're using any sort of technicals in your charts, right? And I use a combination of quantitative analysis, technical analysis, fundamental analysis when I'm evaluating a symbol. But some of my trade signals, especially when I'm selling premium, looking to, trade sideways choppy at tops and bottoms, I use some technicals. And what people have to remember is that technicals are all calculated. They're not just magic arrows that show up on the screen. They're based on past patterns repeating themselves. Well, if a symbol is in the news headlines, you're not going to have a past pattern repeating itself. It's what I call a transient, short term, external, not from repeating patterns, stochastic shock. You're having a transient external stochastic shock. And so if you get one of your arrows showing up when something is in the news, when the mainstream media is picking it up, it's more than likely going to be a false signal. And I always worry when folks get so caught up in using like a particular indicator or indicator combination, and they forget to pay attention is this stock in the news? Because if it is, then a lot of those signals have a lower probability of being actual signals, right? So with all that said, Pfizer's out of the news. I'm starting to believe the signals again. It's trading sideways. You can see I've been looking at some of my support and resistance lines here. And if I extend those over to the right, which I can do really quick, boop, 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 it still seems like we've got a majority of this price action, this sideways choppy happening in my initial lines of support and resistance. This makes it something that I'm really excited about selling premium on. I could do a diagonal spread. I could do a covered call, covered put. I could do any of those strategies and do it just outright. But if I really wanted to supercharge it or turbocharge it, what I would do, and I'm at a top right now with Pfizer, is I would go ahead and set up an initial covering position. In this case, I'd either be shorting Pfizer, or I could buy some deep in the money, far out in time put options. And that would be an initial covering position to start that cycle of selling that monthly premium and also making an additional profit source out of rolling out protective options. So I like to do the combo: sell premium, buy a little bit of out of the money protection, and then roll them out every month. Create this like 10-15% income stream off of this particular stock. And you know what, Lonnie, I think you found a good one. I would wait for my, whatever signal you're using, I would wait for it to materialize before I short this stock or buy that deep in the money, far out in time put option. But that's what I'd be looking at. And of course, if the thing goes down and, completely busts out of the channel to the downside, screw the whole premium selling. I'm the first one to say, forget about that and let your initial covering position be a directional trade in the down direction.
Casey, any love for Pfizer from your end?
Just a very absolutely different point of view, which is amazing. I love it. So Pfizer is, in my opinion, bottomed out a little bit, and it's still in a downtrend for sure. And I'm definitely not buying right now, but I'm watching the consolidation. And it has been consolidating. It's tried to go below 25 a couple times. It's tried twice, maybe 3 times, and it hasn't made it out. And so there's been buyers stepping in. They're holding that level. You can see the buying activity with the volume and the options buying. And so in the last 2 weeks, we've got a really big move to the upside. And so I'm looking at the price point of about $28.50. And when I like to look at weekly charts. And so if the price will move out above $28.50, I would be looking at making that a buy trade. And if I was doing an options play on it, I would buy an in the money, maybe 6 months out call, looking for it to get, about $35 area, somewhere like that, because I feel like that would really be some good upward momentum.
Absolutely.
Yeah.
And just so Lonnie, as I said, make sure before you do my strategy that you get your signal. And that actually plays perfectly into Casey's, because if you never get my signal, it means it's going in the direction of up, right? And so you'll want to do, in other words, what Casey and I said don't contradict each other. They actually play off of each other pretty well. Right?
You see, and that's what I love, AJ, about getting different points of view and perspective, is because a lot of times people will say, oh, that's a difference of opinion, but really it's a difference of perspective.
That's
And
correct.
a great example I use is my wife and I. If I'm in the park and there's a car accident or something, and the policeman interviews my wife, like, oh, what happened? Who got in the accident, right? They would get a totally different set of details, a totally different perspective. And then when they ask me, and they might even think that it was a different event that we were watching it. That's how different we are in the way that we
Right.
describe things. But in reality, it's just additional information to help you make a better decision.
Yep. So Lonnie, top signal, if you find that you've got a solid top signal with follow through, maybe you sell some premium. If instead it starts to get above 28.50, 29, start thinking about doing a directional position up.
All right, that's PFE, ticker symbol for Pfizer. All right, let's move on to our third and final name in the speed round. This is Nate from Las Vegas, Nevada, interested in Alibaba, ticker symbol BABA.
Okay, a little bit on the higher price side. So for those of you that are, you'll have to factor that into your premium selling. It may clip you out if you've got smaller portfolios. But with that said, nice sideways price action when looking at the 6-month chart. My signals are a little bit jumbled, which tells me that, I'd have to do some back testing to figure out if this is something that gives me solid signals. But, I got this top signal right here where we're kind of topping out around $80, but it did not get follow through. So could you sell premium on this? I think you could, but at the same time, it's been so inconsistent. It's been consolidating. It's been breaking out. It would be more of an advanced trade, almost to the point where it would fall off my radar because I'm lazy, right? I like to do trades where the signals are so crystal clear and that I can just count on that income. Plus, I got a toddler now, and the scoop is if I can't do it after she goes to bed in 90 minutes or less, figure it out, and then let my automatic traders trade during the day so I can play with her all day. If I can't do that, if it's not that crystal clear, if it's going to be requiring me to be sitting in front of the trading platform during the day when I'd rather be out playing with the kid, it's not for me. So take that into consideration. You're going to have to be a little bit more active in watching your signals as far as I'm concerned on Alibaba. It may have fallen off my radar for something that's lower hanging fruit, but I'm interested in what Casey's got to say.
Well, so this one for me is and I'm in agreement with AJ on the time thing. What I like to do is stay out of the markets all week. Today's Friday. Friday's my trading day, right? I love to look at weekly charts. And when the chart closes at the end of the week, then I'm looking for making a trade based off the weekly chart. And so this week has pulled back a little bit, but if you'll notice, last week it did break out of that box. And so it's pretty bullish based off of the breakout that I saw. And so a lot of times you'll get that, where when you look at moving averages, price is crossing up above the moving averages. It's been beaten up for a long time. And so I am looking at this as a definite directional play, looking for it to probably get up to $100 just because of the breakout that happened. I love getting the consolidation and the breakouts, and this week has been a consolidation week. So, those happen, but that key strong breakout from last week to me was definitely a bullish signal. I think that we're going to be going higher, but obviously with trading, you just never know. You just play the pattern, you play the probabilities, and you are consistent with your entries, that you enter your patterns at the same time, you make your trades at the same amount of risk, and you exit the same way. And then over time, your probabilities is what's going to give you your success in the markets, not on getting hot tips.
Casey, are you saying be consistent?
Yes, consistency is a superpower.
Mm-hmm. And discipline. I agree.
Consistency and discipline. That's it. You know what? You're not getting the results in your life because you're not disciplined and consistent. That's all it is. In every area, trading, family success, whatever it is, that's, health. It's all about being disciplined and consistent.
It's a little bit
Discipline is
difficult
freedom.
though when they keep putting shiny objects in front of us.
AJ, did I say that it was easy? It's simple. It's not easy,
Yeah,
especially for me.
me too.
Yeah.
All right. Well, if anybody wants to learn a little bit more about consistency, some of these box breakouts, I don't know if I use the right term, but it seems that that's kind of the strategy we were going over. Head on over to tradingstrategyguides.com. Casey, thank you for taking some time today to hop on the show, give us a little perspective. The link to his website is in the chat. Head on over there, grab this price action sheet if you want to learn a little bit more. Yeah, Casey, thank you for hopping on.
It's great
thank you for
great to
having me.
have you on my show, Casey. I love talking with you.
Thank you.
All right, Casey. We'll catch you later. Once again, if anyone watching wants to head on over there and grab some of Casey's content, he's got some good stuff. So, Casey, enjoy the rest of your day. Enjoy your weekend. We'll catch in with you, in a couple weeks or so.
Thank you.
All right. Nice little fresh perspective.
Yeah.
On a more boring week, right?
Mhm.
Big thanks to Casey. All right, we're getting close to the end of our show here. AJ, heading into the weekend, anything we should be keeping an eye on? What do you have on your radar heading into next week?
Well, this is the week before May options expire. May options are expiring a little bit early. We had monthly options always expire on the third Friday of the month. So I'm making sure all my positions that are set to profit on the third Friday of May, that they're all in order, that I don't need to close any of those positions. You always, there was when the options floor had actual people on it rather than just a whole bunch of electronic trading. A lot of the traders had this phrase, I'm not sure I can say it on air, but it said basically, don't be a jerk for a tick, but it was something that rhymed, right? In other words, if this thing is going to, be very close at expiration and maybe you're going to get exercised out, it's safer to close the position a day or two early. So I'm going to be looking at that in my portfolio about any of these positions that maybe I need to go ahead and close out a day early because it's going to be too close to the strike price. But otherwise, I'm getting ready for June premium, and that's where I'm going to be looking, Sip. I'm looking at what positions need to be modified next.
And if the chop is ahead, we've got some really good setups to take advantage of that, which we'll continue to keep an eye on. All right, ladies and gentlemen, we appreciate everybody tuning in. Any of the new viewers, thank you very much. If you've enjoyed some of this content, please show some love. Hit that follow, hit that like, hit that subscribe button. If you have some questions or some follow-ups, feel free to leave it in the chat. Send us a DM. Someone from the team will get back to you and try and answer that. Otherwise, thank you all for tuning in. AJ, thank you. Big shout out to Casey for stopping by. Hope everybody has a good weekend. We'll see you guys next week.
Take care, everyone.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you